When you hear someone discussing reverse mortgages, they are generally talking about the reverse mortgage product insured by the U.S. government, known as the Home Equity Conversion Mortgage, or HECM. A HECM is a federally insured home loan that allows borrowers over the age of 62 to convert a percentage of their home value into cash or a growing line of credit. To be eligible for a HECM, one of the borrowers must be at least age 62 or older, except in Texas, where both need to be over 62. And they need to live in the home as their primary residence and have sufficient home equity. Keep in mind, with a HECM, the borrower still maintains the ownership of their home and can sell it at any time. The HECM is simply paid off at closing, just like any other mortgage product. When you obtain a HECM, any existing mortgages will be paid off and you will no longer be required to make monthly principal and interest mortgage payments. Just make sure to pay your property charges like taxes and insurance, just like you would if your home was paid off. Contact a retirement mortgage professional today to learn more about the HECM product.